Very good afternoon to everyone present here. Firstly, thank you for joining the earnings call for half yearly 2024-25. Myself, Shripada Patil, CFO at SKP Bearing Industries. I'll be presenting the earnings call today. Our agenda will start off with a brief introduction, followed by financial highlights, then operational highlights, a market overview, strategic initiatives, our MD's message, their outlook and guidance, and then Q&A session. A brief overview for those who do not know SKP. SKP Bearing Industries Limited is a renowned manufacturer of rolling elements. We were established in the year 1991 and we have been serving clients in various industries for the past 30 years. SKP's rolling elements are extensively used in many industries such as automotive, textile, electronics, pharmaceutical, and many more. We have an in-house team of rolling element experts who make exceptional products for our clients. We launched our IPO in July 2022, offering investors to be a part of our growth journey. In 2024 February, we acquired a 95-year-old French company, Valid Equarant Industries, located in La Tourette, France. Our product range, we are making needles from small size to large size, balls of various chemistries, various types of miniature balls, coated balls, and many other product lines. Our board of directors remains same. Mr. Shunan Porshikar, Chairman and MD, Mrs. Sangeeta Porshikar, Mr. Rajiv Lokre, and Mr. Kishore Parikh. Our financial highlights. Our revenue, as you can see, the standalone revenue for this half yearly is 27.49 CR, which is at a 7.65% growth as compared to this similar period for last year, and the consolidated is at 34.85 CR. The profit before tax is 9.92 CR standalone and consolidated is 3.51. PAT is 7.41 standalone and 1 for consolidated. Earnings per share for standalone is 4.47, consolidated 0.61. For standalone, EBITDA is 10.18, which is at 37%, and consolidated is 3.87, which is at 11%. Some of our accounting ratios, as you can see, for standalone, most of them remain similar. Cost of goods sold is at 28%. Profit before tax is 36%, which is because of the liability. Net profit margin is at 26.98%. EBITDA is at 37%, and employee cost is 8.05. Cash conversion cycle is similar as last year, 202. For consolidated, we can see the cost of goods sold is at 25.79%. Profit before tax 10%. PAT is 2.88%. We are still profitable after all the French acquisition and all the expansion as well. EBITDA is 11%. Employee cost is 24.35, again because of the France consolidation. Cash conversion is 60. Current ratio and quick ratio are shown in the slide. Some of our operational highlights. Our ground-based solar project PM Kusum Yojana was commissioned on 19th June 2024. Its capacity is 2 megawatt AC. It is the first such plant under PM Kusum Yojana scheme. Our continuous furnace, which was commissioned last year, is under the validation is done. The new ERP was also commissioned in this year. The trial run at plant 3 is done, and we are expected to commission in this half. Some of the industry sector overview. As you can see in the automotive sector, because of the EV transition, There has been a pressure on the component chain. So here we are facing some market is a bit down on the automotive side. Pharmaceutical side, customizations and small batch manufacturing has raised the cost and it's impacting economics of scale. So large manufacturers are benefiting from the pharma industry. Similarly, in the cosmetic industry, more competition has increased because of which volumes of scale is taking place. So there we are facing good demand. Similarly, the industrial challenge, other industrial sectors are also having a basic, the requirement is not increased or decreased; it's remaining stable. As for our segment, this year the bearing segment is at 33%, the magnetic clutches are at 21.85%, UJ crosses and others are at 15, 13 and respectively. If we check the industry impact, two-wheeler industry is at 26%, bearing industry 24% impact, commercial vehicles 18%, automotive off-highway is 15%, aftermarket is 13%. So as you can see, no one particular industry has more than 26%. Our roadmap for the nearest future will be streamlining all the plant activities and strategizing our various synergies in this year. Start of operations and revenue from Plant 3 is planned for this year. New value added product line developments is the new strategic initiative, and we'll be establishing global customer reach. I would like to ask our MD to please share his insights. Sir?
Good morning. I would like to say because I'm sitting in France at 6 degree. So would like to first give thanks to all the shareholders and investors who have joined this particular conference call, earnest call. And then this would, I would like to bring many new things. So I would like to inform all our investors that our initiative to acquire French company and then to have a global reach is now giving fruits. There are new synergies getting combined now. Technological, we have received many advantage, many new technologies also we are acquiring. Also, we are putting new technologies now in place. So what we are seeing is a very big future for SKP as a globally. This is going to give a great benefit to us for the next years to come. The global advantages, what we are getting because of various efforts, what we are putting, new plants, new technologies, new product lines. We are also working on new evaluated product for which we are getting very good responses. So this is going to be a new landmark and new futures for SKP in years to come. So I again thank all my shareholders and investors to have a faith in us, because so far what you have seen, we have come, we have listed in 22, we are now in 24. In 2 years period of time, we have from scratch, we have put to full operational condition plant 3. We have executed many projects, so many capital expenditures which was done in past. Now is going to be all streamlining in 2024, 25, 25, 26 and 26, 27. So we'll be climbing to new levels in years to come. So thank you very much again, and thank you for joining the meeting.
Thank you, sir, for your valuable insights. With your permission, I would like to open the forum for question answer session. Yes,
please.
Mr. Kavi.
Sir, am I audible?
Yes,
Yeah,
please.
good.
Sir, so first of all, on the domestic business, what's the status of the plant, new plant? When is it expected to commission? And can you talk about that?
Sir, I'll be answering this. The plant is expected to commission in this quarter 3 of financial year 24-25.
Q3.
Yes.
Okay. And how do you expect the ramp up to happen what's the sales outlook like? In your initial commentary, you mentioned that there is some slowdown of demand from the automotive side. So, how are you looking at ramping up that capacity?
Oh yes, the automotive sector is a bit slowed down because of which we faced a bit of difficulty in quarter two. But since we do not have any impact of more than 26% in any particular industry, so as you can see, our automotive industry impact is very less. So because of that, I don't see any problem for ramp up of production or revenue from any of the plants. As for the revenue start from plant 3, we're expected that to happen in the second half of financial year 24-25.
So, do you have demand from your existing customers or new customers for
Yes.
that new capacity?
Yes.
Yes. I would like to add here a
Sure.
few more things. Our strategy for plant 3 is a total different approach. We are not focusing on a customer base who is already getting supplies from locally from other manufacturers. Our focus and our strategy is to convert these customers who are importing, and this is resulting in our capacity allocation a very quick way. What is We are planning the capacity to have a 200 tons per month in the stage 1. We have already customer identified, all commercial being settled, and sample submission and line activation and line occupancy. So what we are not talking of, identifying customer, then talking to him, pulling from one, deducting from someone. It's not like that. So the customer is already uh, available. We are discussing with them. Already visits have taken place. So it's question of allocation. So what initial stage capacity of 200 tons, what we are discussing, stage 1 is more or less being allocated to the defined customer base, only commercial things and things like that.
So, would you say that probably second half of next year you will be able to achieve a good degree of utilization of plant 3?
No, we cannot say that.
A good percentage
Good.
of utilization,
Yes,
good
yes.
level of utilization. So
Not in
that's
the
what the
second half
plan
of
is.
this year.
That's what the plan is.
Okay, got it. And sir, there is a significant difference between the consolidated profitability versus the standalone profitability. I assume we are burning some capital to in the French subsidiary. So, could you talk about when do you see some kind of revenue ramp up happening from, and what is the stage of I think you had a lot of work to do on the French side. So, where are you at in that journey?
Yes, see, any European acquisition is not that easy. So anyone who is knowing the business cycles, how it performs in Europe, and how it happens in USA, and these are like consumer economies. They are not manufacturing economics. So the cost of operating from the French location is very high. So what we are focusing in is to get the customer confidence back. That's the strategy number 1. Number 2, we are projecting to them as to have a global supplier who has got a sites in India and sites in Europe to support his supply lines. So we have all global customers from here. Currently, we are catering to customers from SKP France, as to Mexico, Brazil, China, Poland, France, Thailand. So all these continents we are already into. You won't believe we are supplying from France to India, even though we are there in India. That customer never approved us for past more than a decade. We had been trying, we never got an approval. But now it's very simple. So it's the both ways. We have a door open. So we are now projecting a global supplier to a global customer. So this is a very big jump that is not possible just stay in India. That was one good achievement. Secondly, the cost, as Shripada has highlighted, you must have seen the cost of employee cost in France is very high. We are working on various synergies, working on certain lines of actions so that we bring down our cost under control very soon, very fast. So these are the things which is happening. Uh, First year is going to be very difficult for us to revamp a French entity. Second year, we see a very green light for French entity, that we would be in a very good commanding position from French entity also, to in terms of a turnaround.
So, but what's the utilization like right now in your French entity of the capacities?
See, it's a very difficult question because capacity is a huge capacity. At this particular entity was doing something like 16 million, 16 million at one point of time. So the capacity is available here to make 16 million euros. Okay. The company, when they were in bad shape, they were doing something like 8. We are currently around 2. So this is a projected annual levels. Currently, we are operating closer to. So we have a sky to reach,
Right.
but yes, opportunity is huge.
So now, sir, your domestic capacity is also coming online. Plus, you've taken on board the French business as well, and there, we are at least in the initial bit losing some money. But so, what's the balance sheet situation like? I think surplus cash we deployed in the solar project. So, are we good to, from a working capital perspective, are we good to ramp up both in the Indian side as well as the French side at the same time without any balance sheet challenges?
No, there is no challenge as such. We are very good in thing. See, we were debt free before we started listing. Last year, we are debt free. We plan to have a debt free again status maybe another maximum 2 years period of time.
Right. And so, you are running at, I think, this quarter you closed in at 34 crores on a consolidated basis. So, where do you expect to be, in terms of the outlook? You mentioned that, so for the next half, H2, what kind of top line do we think we can achieve in a, conservative manner also?
See, I tell you, you all being our shareholders, you should know. Okay, what we are targeting or what we are focusing is 1 to 4.
Mm,
100 crore, 200 crore, 400 crores in next 3 years line of time. This is what is internal targets, what we are
mm,
keeping. This
mm.
year, we need to achieve 100 crore, next year, 200 crores, and next to that, 400 crores. These are the internal targets, what we are focusing. And my team is working very hard to achieve India, French. This is consolidated figures, of course. This is India, French, both they have to work as a one team, uh, one team globally. This what is a new tagline what we are working right now, and to achieve these levels 100, 200, 400. These are the work, and we need to also focus on top line as well as on bottom line. So we are also working on having a cost controls measures, various new thinking to have uh, profitability levels also maintained.
So, sir, you mentioned that in H1 we did 2 million euros business. So, is it 2 million euros for the entire year or half a million, 1 million,
One
one
for
million?
full year.
Okay,
For
so
full year, it is 2 million.
2 million.
We
So,
acquired company in February,
okay,
so
so
we were number two. Here the calendar year works,
right.
but we being a new company, we are entitled to have a flexible financial system.
Hmm.
So we are trying to get approval from a local government to have a first financial year and align with our financial years. So we
Okay.
work on a single platform for future
So,
altogether.
of the 34 crores of revenues that you showed in consolidated, 1 million
Uh,
out of that was 1 million out of that from the French entity.
yes, something like that. 1.1 or 1.2, something like that.
Okay, so but then that would mean you had a slight degrowth in your domestic business.
No, no. Shripada, can you just go on that slide?
Yes, sir. One sec. Are you want to
7
know
point.
the slide?
Yeah. Just go to that slide,
Domestic slide.
Domestic
our
and
revenue slide. Yeah,
yeah.
yeah.
The
Yes,
revenue for the
this is standalone.
domestic has increased by
Okay,
7.65%,
got it.
and
So
that for the consolidated is increased by 32%.
got it. So, like, just to reiterate what you said, you're targeting somewhere around 100 crores of top line this particular year, FY25. And with the ramp up of capacities in the next year, maybe possibly you could actually get to 200 crores also, right? And what and on the, since you said it's going to be consolidated, what how are the customer interactions going on in France? I believe a lot of customers had left, since the existing entity was not able to service the clients. So customer traction, how's that going? Have you been able to onboard a
This,
lot of the
this is
customers back?
this is the only single largest challenge I'm working right now. My entire team is marketing team, and all of us are working on this to bring back customers. See,
Many
uh,
have come also.
yes. So you want to say? So many customers, uh, all see, it's very easy to lose a customer. To gain back the customer and to gain back the confidence is the most toughest. We are working on them to. First thing is that we are reliable. We are going to be existing here, India, in France for them, and we are always available. We are flexible. We are providing solutions which is next generation, because we have all the technological advantages which are available. We are committed to our customers. All what customer needs, we are providing. So we have a little challenge. It's not like, because they just generally do not accept uh, that someone which they have phased out again they want to take. So they are analyzing it. Some are coming back. Some are discussing. They are sharing our volumes. But see, with our commitment, with our focus, uh, I'm sure over a period of time, because the time only can prove some things. So
Right.
this is what is a thing. I'm confident that over a next maybe 1 year, maybe 2 years, the customers who, even though they lost in past, maybe 5 years back, maybe 10 years back, we hope to gain their confidence.
Okay. And could you also throw some? I think the product profile of the French entity is vastly different from what you do in domestic. So could you also talk about some of the products that you're doing or proposing? Because you mentioned you're looking to add some new value-added products. So can you throw some light on that? What are those products going to be, and which what kind of customers they will have?
Shripada, show the photograph. Yeah. Explain, Shripada, the photograph.
Okay. Um, yes, sir. You can see on the top left corner the big rollers. This one. This is basically what India plant was manufacturing. These products. Okay. With
Yeah.
the addition of the France entity, the bottom range and the miniature balls, all that has been added. So India plant was making diameter 1 mm to 40 mm and balls from 3.5 to 22.25. Now France is making coated balls, miniature balls. Now miniature balls are from zero point 0.6 mm, so these small, which go into the pens, ball point of the pen. That. Then we are having plastic balls. They are going into pharmaceutical industry, glass balls, gold coated balls, silver coated balls. These are going into cosmetics and pharmaceutical industries. Also, there on the left hand side corner, you can see something which looks like a UFO. So the name of that product is satellite. So that is going as a media application. So the industry for SKP France is totally different, not totally, but largely different compared to SKP India.
Got it. Um. Got
Value added product, different line of products. Some customers having a common supply chain also. It's not like that totally different.
right.
But then we have added so many products. You won't believe the line of customers what we are catering to is unimaginable. I cannot quote them on a public platform,
Sure.
but anybody who's coming in person, maybe we can see the line of customer is one can dream of. Okay, you have these customers. Yes, it's like that.
Right. And since you mentioned the cost base of France is much higher than what you've traditionally had in India. So as you ramp up France revenues, is it going to be as profitable as your India business? Because traditionally that's been your core strength. Your EBITDA margins have been really strong. So going from 50 crores to 100 to 200, would there be some cut in your EBITDA margins?
Past so many years, so many questions asked about the same thing, and you
Hmm.
must have seen the more or less uh, uh, we have maintained our levels. We are a cost metrics management masters in cost metric. So we are working on these for the French entity to have all these. So uh, we are going to control our cost. My power cost is less in France than in India. So
Got it.
it is very surprising. So people will ask how it is possible that you have a less cost of power in France than you have India. So yes, that's the negotiation. That's what we do with the suppliers over here. So we try. Plus we have a different. I sell one product at suppose 100 rupees in India. I sell that same product in France at more cost because the cost of production the customer understand, but the logistic cost, the risk, so many factors. So they consider this, and there is a weightage, definite weightage. So yes, the cost is more, but yes, the top line also is more because of the various factors.
So then, sir, like, the kind of profitability we had, PAT percent profitability in FY23 was significant. So would you be able to do that kind of PAT percentage profitability at 200 crores revenue also? That would mean a strong growth in your bottom line, significantly stronger than your revenue growth also, which in
See,
itself is quite fast.
see, we try to do our best. So this is what is our focus. What you are saying is an outcome, is the resultant. So we focus on the effort side to control our cost, raw material cost, delivery cycles, faster cycles, lower inventory cycles. So we have internal targets to have control on each and every parameters, better utilizations, high automation. So these are the things, and the result would have a maintaining the profitability levels. So we try to focus uh, on the controlling the cost. Let us hope it maintains.
Okay.
See,
Final.
customer cost, customer pricing, we have very less flexibility that anybody, if somebody wants to even sell a car or a aeroplane or even pencil, very less flexibility as to the pricing level, the top line.
Hmm.
So what you have to focus is in your hand. So we try to do that.
Right. And on from an organizational perspective, to go from 50 crores turnover, what you did last year, to go to 200 next year, are we sort of well capitalized on the employee and the management bandwidth front to do such a significant ramp up?
Yes, we have all the management new, so many professionals have joined in last some period of time. So many people have joined. Some people are joining like that. So it's all ramp up,
Ready my team.
upgrading our team. Yes.
Sure. Got it. Got it. I think, sir, for now my questions are covered. Maybe I'll come back if there is something.
Okay. Welcome. But I am 50% in India, 50% out of India.
Right.
So if you want to meet me, you have to like just let us know the period.
That's why I also asked about the management bandwidth question. I mean, I
Yeah, yeah,
wish
yeah.
there were two of you, but there is only one. So therefore, I was asking.
So there are so many. I will see you. I am the front face. Please
Hmm.
understand. I am the front face. So that is why Madam was telling, okay, Shripada, but she's in the back of her also. There are
Hmm.
so many people because we are just sitting relaxed. And we need to have the management done properly. This is how the team works. When this is how we believe in developing our team.
Sure. Thank you.
Um, do we have some other questions?
Okay, Shripada.
Yes.
I just want to understand कि as you are 2 years old in the मतलब after listing, so when we मतलब what's your plan for main board listing?
For listing,
Main board BSC or NSC.
yes, yes. Our period for listing, as per statutory regulations, is 3 years. So once this financial year ends, as per regulatory requirements, we will be filing accordingly.
Okay, okay, great.
Yes. Yes, Gaurav sir.
So just one last thing on the numbers front. So your India capacity now, with the potential inauguration of your plant 3, would be in terms of revenues. You have the potential to do 200 or 150. What kind of revenue potential do you have from India side?
We
Total capacity.
have for plan 3.
Total India capacity. What is the revenue potential at full utilization?
I don't think we can disclose numbers, but we are looking at good
No,
figures.
I'm not asking for a projection or what you're going to do. I'm just asking what is the potential that you could do once you utilize it.
Capacity. What is the
Capacity.
capacity?
Yeah.
Utilization.
Yeah.
What is you have a plan to? This is a capacity what we are putting.
Yeah.
So 200 tons for rollers and 200 tons of ball. So
Yeah.
rollers, how you're ramping up your roller capacities, how you're ramping up your ball capacities as you were 200. So what is your revenue projections when you are at full utilization? That's what is a question of
Yes.
Mr.
I think we are planning the capex as per our internal targets, as sir already said, 100, 200, 400. After that, we have to.
That's
That is
a
a
total projection. What I am
consolidation.
asking is your India business. What is the true potential of an India business when you do 100% utilization? What kind of revenue can be hit?
So,
I'll,
hmm.
okay, I'll just answer that.
Sure.
See, the at 100% utilization of both ball and roller capacity is what we are adding, and
Yes.
we plan to 200 like that. We have a potential to touch 160 in India alone.
160 at full utilization.
Yes, for
Okay.
India alone. Yes.
And so whatever our projections are for next year, 200 crores. What kind of utilization on this 160 crores will? So what is the contribution going to be from India business in
Uh,
FY26?
yes. See, there are certain factors in this thing because
Right.
we are right now working on some new applications.
Right.
Because you must Shripada has shown like that a big
Yeah.
pins. These are all basically big rollers for windmills, for railways applications, for other critical industrial applications, big gearboxes like that. This
Hmm.
is a new type of business what we are talking. This is
Hmm.
very high in value, and the capacities for this. How do we get fast? So what we are working is on the ramp up of these all businesses, and so these 200 tons for rollers and 200 tons per ball. But for ball, it is very very fixed type of thing that we have customer 1, 2, 3, 4 lines 1, 2, 3, 4, 5, 6 working conditions utilization put to use 200 ball is like very much fixed. A roller we are already working close to 100 tons. We have a target for to add another 100 tons capacities plus customer base. So this is a line my currently we are focusing right now. For next 1 year to 2 years period, I think we should be in a position to do that.
Okay. And from France, sir, next year, what do you expect from France? You will have had 1 year because since you acquired in February of this year, so by the start of next year, we will have had 12 months of repair work or a lot of
It's
employee.
not like that. Actually, the plant is beautiful. It is
Yes.
fully functional.
Hmm.
Everything is there. You
Hmm.
can just imagine we are 1.5 times larger than our largest ball manufacturer in India. 1.5 times larger than the largest ball manufacturer. Some leaving few assets here and there, and things like that. But to get the customer back, to get the customer confidence back,
Hmm.
this is the focus. It's not the production capacities. is to get the customer confidence, we need to do some investments also here. So we are doing those investments. That is why you must have seen the capex. There is there. That is why you must have seen all the figures. Those who are analyzing the figures, they must have seen there are so many increase in the unsecured loans. These are the factors. Actually, these are playing a role.
Hmm. Got it.
And there is a very trained manpower here also in France for this products, very experienced. So
Yes.
as far as power and technology is concerned, I think there should not be any problem. Only we are waiting for the customers to give their POs to us or
Customer
allocate.
confidence back
So
to us. This
of these customers that you're pursuing, how many have you been like? Is there have you had success with some of them, or
Yes,
it's still a
yes. We definitely had
the,
success.
we,
They have come, they have visited. That has increased their confidence also. But they will not give their full load to us immediately. They will give us part by part. So that the thing process is going
sure?
on.
Thank you so much. Thank you.
Any other questions?
surprising. Naga Burma is not having any questions. Okay, so doesn't seem to be there in the line. ठीक है?
Hello.
Yeah.
No,
Yes,
sir.
Mr.
How are you, sir? Nice to
I'm
see you,
good.
all of you. Since I had met just 2 months back, so as naturally there are not much questions, and Mr. Gaurav ji has already asked all the questions. So I was just hearing. So nice to see all of you, and all the best, sir. All the best.
Thank you, sir. Any other questions? So, if no questions, then I think we can conclude. Okay?
Yep. Yes.
Okay, then. Thank you all for being here with us today. And looking forward to be associated with everyone. With your permission, I'd like to now close the call.
Thank you.
Thank you very much. Thank you, everyone.
Thank you.
Thank you.
Bye.